Stocks or real estate? If you had to choose, which would it be? For decades, this debate has been ongoing, and today we're just going to break it all down. Whether you're looking for passive income, long-term wealth, or financial freedom, I'm just going to give you the pros and the cons, a little bit of my opinion as well, and then real-life insights to help you make the best decision for you. Let's build the case for real estate. It's pretty clear that real estate as an investment offers you a tangible asset that you have control over, plus the potential for rental income. If you look at real estate as an opportunity to improve your quality of life, such as better schools, amenities, shopping, lifestyle, then I feel you. I'm actually right there with you. By the way, if you're new here, my name is Mallory Vodi with Financially Present. Please take a moment to just hit that like button, subscribe, and turn on notifications to support the channel. I'm simply a financial educator and financial consultant. I spent my previous life as a stockbroker, and I just like to help people make better financial decisions and make money. So let's switch gears and talk about accessibility. According to the National Association of Realtors, the median home price in the US in 2023 was $417,700, making it pretty difficult for many first-time home buyers. And then 64% of Americans live paycheck to paycheck, and a report by Bankrate states that 57% of US adults couldn't cover an unexpected $1,000 expense with their savings. Mortgage rates have also risen significantly because as of 2024, the average 30-year fixed mortgage is around 7% compared to 3% in 2021. So let's be clear, real estate is just not one area. There are multiple classes. So we're talking about residential, commercial, agricultural, industrial, and even special use properties like government buildings. So for this specific conversation, I'm talking about residential real estate. So homes you actually live in, like multifamily properties or house flipping or rental properties. And so let's talk about the pros of real estate. So cash flow, rental properties, they can provide consistent income if they're managed well. And the average annual return on US rental properties is 8 to 12% depending on your location. Leverage. So leverage, you can use mortgages to acquire assets and build wealth. And this is assuming you're okay holding on to a lot of debt. Real estate investors usually use a lot of leverage to buy properties and grow their portfolios. There are also tax benefits. So when we talk about tax benefits, you can write off mortgage interest, property taxes, and even depreciation to reduce your taxable income. In fact, real estate depreciation alone can offset 20 to 25% of rental income annually. And then the tangibility, which I touched on, you can see a house, you can feel it, and that provides a sense of security in this investment, and stocks don't offer that. And then there's the control. You can control or influence the value of your investment by making improvements on the house, like upgrading the features of the property, buying new appliances, renovating, and so many other ways. Let's talk about the cons of real estate. So, upfront costs. You need a significant cash or just to take on debt to start. In 2023, the average down payment was 13% for first-time home buyers and 19% for repeat buyers. Another issue is it's not liquid. So, selling a property takes time. It's not easy. It's not as easy as selling a stock. So, selling a home takes an average of 40 to 50 days in a balanced market. And this doesn't take into account the time it takes to find a buyer and close. Management is also an issue because tenants can be hard, maintenance, there's taxes. These things can be unpredictable. In fact, the only predictable part is that they can continue to go up. I've heard good stories and bad stories about consistent tenants that pay on time and respect your property, and they treat it like it's their own, all the way to the horror stories where people don't pay their rent at all, they refuse to leave, and sometimes they even destroy your property. 45% of landlords manage their own properties, and over 60% say dealing with tenants is their biggest issue. And then, there's the business aspect. So most people, or most of the time when people talk about the benefits of real estate, they aren't doing it in their personal name. They normally form an LLC or a separate entity to maintain certain real estate transactions outside of their primary residence. And this is to your advantage because it helps from a liability perspective and a tax perspective. So if you do real estate investing outside of your individual filing status, you have to do it in a business name or entity name. Market dependency is also a concern because if the housing market shifts, your property value and your rental income, that's going to take a hit. The comps in the area, that's another issue. No matter how much you can upgrade a home, there's a reasonable limit to what you would do to a home in order to sell it because it has to make sense. If you have a 3-bedroom, 2-bathroom home and all of the other homes in the neighborhood are similar, it doesn't really make sense to upgrade all the rooms and the bathrooms and the fixtures and do all these premium or premier features and extravagant finishes or add a bunch of rooms because it's going to be compared to what's around it. And if there's nothing around it like that, then you have an issue. So it's going to be harder to sell if it doesn't compare well with some of the comps in the area. And the same works on the opposite side. If you don't make the right enough upgrades and look at the comps in the area, you need to accept less for your home. Another concern is crime, safety, or just job opportunities. If there's significant crime or lack of opportunities in the area, the desirability is just going to drop drastically, and you can be stuck with a property that's just hard to sell or hard to rent. Look, real estate requires a significant amount of cash, and depending on the market you live in, it can be pretty difficult to start. I've been a homeowner for over 10 years, and for years, we considered renting out our townhouse while buying a single family home. But when we really looked at the market and the season of life we were in with our kids and where they were, and then we looked at our investment portfolio, we decided it was actually better for us to just sell the house and move into a different one. And I explained that in detail in a different video. So if you're interested in that, please check that video out or it'll be linked in the description below. Now let's talk about stocks. When it comes to the stock market, so investing in stocks means you're buying ownership in businesses. The reason stocks can generate higher returns is that they come with more risk and volatility, but that's not necessarily a bad thing. It's something you just have to learn and eventually get used to because everything is technically scary until you have all the information. And sometimes you don't even need all of the information. You just need enough information to make a confident decision. I spent nearly a decade as a stockbroker, and that's from intern all the way to branch office manager where I supervised other stockbrokers. And I had the opportunity to learn everything I needed to be very, very comfortable with investing. So let's take a moment and talk about the pros of stocks. Liquidity. You can sell stocks instantly, unlike real estate. You can also buy stocks instantly. So there's no need to set up a meeting and gather all of your tax returns and get approved for a loan. Create an account, deposit the money, select the investments, and hit buy. If you don't want it, you can hit sell. There's also a low barrier to entry. You don't need thousands to start. You don't even need to buy a whole share. You can invest simply with $5. Just compare that to the 5 to 20% down you need for real estate, and that kind of makes the decision pretty easy for you. Diversification is also just a plus side. You can invest across industries and entire countries without physically being there. Reinvesting and the automation of that. There are stocks, there's exchange traded funds, mutual funds where they pay a dividend and you can have it just set up so it automatically repurchases more shares of that same investment and it can help you compound. But you can't do that with real estate. Not unless you do this with a real estate investment trust, which you would buy in the stock market anyway. Flexibility is also on the plus side. You could just cash out early. Even if you had to take a penalty in your retirement account, there's much more liquidity when it comes to stocks than it is with real estate. Now, on the downside, market volatility. Stocks, the prices fluctuate daily and emotional decisions can cost you a lot of money. The S&P 500 has experienced 33 bear markets since 1900, but it's technically recovered from every single one of those. You also don't have much control. I mean, you can't directly manage company decisions like you would with real estate. These are really big corporations you're investing in. So there are a lot of executives and other variables that you just simply have no control over. And then there's also the psychological stress, the ups and the downs. All of that within the market can make it pretty tempting to just panic sell. The market drops at least 10% every 1 to 2 years. And that's going to make investors panic sell if you don't have the right mindset. And then lastly, patience. You need a lot of patience. And if you're a long-term investor, which you should be, you need to spend a little time waiting in order to see the real gains. If you're not so patient, then you're likely going to have some of that psychological stress that I just mentioned. Okay, so let's compare the two, stocks versus real estate performance. The S&P 500 has averaged an annual return of 10%. If we adjust that for inflation, it's about 7%. And that's over the last 50 years. And that 10% is higher than real estate, which averaged 8.6% over that same period of time. If you look at the last decade, or from 2013 to 2023, stocks have outperformed real estate, with the S&P 500 increasing by 150%, while US home prices increased by 90%. Then when we talk about long-term growth, a $10,000 investment in the stock market in 1990 would be over $200,000 today. Maintenance, that's another issue that you can't even really put a price on this. The ability to kick your feet up with stocks versus getting your hands dirty with real estate is really unmatched. With stocks, you can literally do nothing and still make money. With real estate, you need to know how to do it yourself or know good contractors and either way, it's still going to cost you. So if you really want the best of both worlds, there are real estate investment trusts. And these are companies that own, operate, or finance income producing real estate. And that's across just different property sectors, not just residential. And it allows you to earn income from real estate without having to buy, manage, or finance the properties themselves. They trade on the stock exchange just like regular stocks would. So my take, or my opinion, it ultimately depends on what type of stress you're really willing to deal with and the flexibility that you want in your life. For me personally, I prefer a home to live in with the option to pull out equity if needed, while my main investing just occurs in the stock market. And why is that? That's because stocks are more diverse, they're more flexible, they allow quicker access to your money. I know people are going to hate me for saying this, but even if your money is tied up in your retirement accounts, like a 401k or an IRA, and you withdrew it, even with penalties, it's still a better option than having to sell your home. There are actually exemptions in the tax code that would allow you to make those withdrawals without being penalized if it's for exempt reasons like financial hardship, or maybe if you're a first-time home buyer. It really depends. I generally discourage early withdrawals from retirement accounts because we want to let our investments grow, but just make sure it's a last resort, okay? But I know for a fact that the flexibility with real estate is not there unless you're having so many properties that are producing cash flow. Something else to consider about homes is if you buy a house, it's in one neighborhood, in one city, in one state. And there are factors outside of your control, like the amenities, the job market, attractions, the stores, the restaurants, the businesses that go in and out in that area. Take a moment and just think about your ideal place to live. And then think about a place that isn't convenient. If your dream home were in that place and it had none of the conveniences or the amenities, then the value of that home won't be as high for you. And that's how people shop when they rent and they buy. They even look at traffic patterns, schools, noise issues, and there's so many other details that you have to consider with these things. So with that being said, anywhere you live is an investment because residential real estate generally appreciates over time. If you live in a home, that allows you to invest in the property and other investments you can afford during that time. If you, on the other hand, choose to rent, that also allows you to invest in other instruments without having to spend money on things like maintenance and upkeep. Even though the rent can go up on you, that's just a risk that you assume with renting. So I have a few questions for you. Do you want flexibility with where you live, or do you want flexibility with your investments? Are you even in a position where you can pick and choose between those? Do you like real estate or do you love it? Because there is a big difference. Everyone should have a place to live, but not everyone needs to be a homeowner. These are all extremely important things to consider, and the reason why I ask this is because most people who eventually rent a property out for income have already lived in the property first. And that's how most people get better interest rates when it comes to these investments. So that's another factor. And they understand the area and what they can charge for the monthly rent. You have to look at your situation right now and consider what the home prices are in the area, and do you want to live there? What are the current interest rates? On top of that, you need to be willing to take on the risks of being a landlord eventually and making sure that you have enough cash to cover maintenance, repairs, or at worst, the mortgage if your tenants stop paying. So if you're able to buy property as an investment and not have to live in it first, it still requires you to know enough about the area, the market, and whether it's going to give you a good return on investment or even the cash flow. You need a place to live. So you have to consider that question first. If you're buying real estate strictly for income and investing purposes, then you might disagree with me. But if you're buying real estate for lifestyle and quality of life, I completely understand that choice. The real focus is opportunity cost. And if you've been with me for a while, you know that this concept is really critical when it comes to building wealth, because the best way to explain it is the thing you are missing out on when you make a decision on something else. That's opportunity cost. When you say yes to one thing, you're saying no to something else. When you say no to one thing, you're saying yes to the other thing. So how you invest, build wealth, and structure your lifestyle all come down to opportunity costs. Whether it's real estate or stocks, you need to consider what kind of lifestyle do you want? How much risk can you handle? Do you want cash flow now, or do you want long-term growth? Look, there is no right or wrong answer technically, but you have to decide at some point, because no market, whether it's the stock market or the real estate market, is going to wait for you. And I'll admit personally, the risk I took in the stock market and the amount of time I spent investing long term, it made me understand how the particular details in the real estate market can make one deal better than the next, and how sometimes you can't time what happens at all. So what do you think? Which investment makes better sense for you? Is it stocks or is it real estate? It might even be both. I would love to hear your thoughts in the comment section below. And if you're really serious about investing, I want you to check out my ebook, and that's 100 Critical Tips to Building Generational Wealth. It is packed with everything you need to know to get started. The link is going to be in the description below. And if you found this video helpful, I want you to hit that like button, subscribe, and turn on notifications so that you don't miss out on future content. And until next time, stay present.